Good afternoon, everyone, and welcome to Figuring Out FNHURS with Saltmarsh, Cleveland & Gunn and Q3 Healthcare Consulting. Got people joining the meeting right now. We'll give just another minute or so to let folks join, and we will be starting. Lots of folks joining. Give it just a few more seconds and we will begin. Welcome, everyone. All right, it is 12:01. I think we'll get started, try to be respectful of everybody's time today. So once again, good afternoon, everybody. Welcome to Figuring Out FNHURS with Saltmarsh, Cleveland & Gunn and Q3 Healthcare Consulting. Couple of housekeeping items. As a reminder, today's presentation is being recorded. You will receive a link to the presentation within 24 to 48 hours, so you can rewatch it. Your video feed and microphones should already be muted to limit distractions, and they'll be limited for the duration of the presentation. Please feel free to ask questions via the team chat function. We will do our best to address questions during the presentation. However, if we don't get to everyone's questions, we'll follow up after the presentation concludes. My name is Andrew Kent. I'm shareholder here at Saltmarsh, Cleveland & Gunn. I lead our post-acute and long-term care consulting practice. Joining us today is my partner, Allison Jones, and Jennifer Zilkowski. Allison is a shareholder here at Saltmarsh and leads our external audit work for our healthcare clients. Jennifer is an owner at Q3 Healthcare Consulting and has extensive experience in the long-term care industry, including C-suite and leadership roles in the skilled nursing provider setting. With that, we'll jump into our agenda for the day. So there we go. So today's agenda, we're going to go through what is FNHURS, who is impacted, what is required, when is the reporting due, where are the reports going to be filed, the difference between the FNHURS system and cost reporting, what a financial statement audit involves, what steps providers should be taking now, and what to expect as a first-time auditee. So got a lot of ground to cover today. And as you can see in our little cartoon there, accounting and accountability, not the same. We're going to be talking about both today because today they are linked. So what is FNHURS? So first couple slides, we're going to try to give an overview of just the program itself. So FNHURS, that's a mouthful. In 2022, the Florida legislature created or amended Chapter 408.061 to create a new financial reporting requirements for skilled nursing facilities based on audited financials. So these requirements mirror those in place for hospitals. The new requirements are in addition to the already required Medicare and Medicaid cost reporting. The audit reports must be prepared by an independent certified public accountant and must contain an opinion on the financial statements. AHCA, the Agency for Healthcare Administration, was tasked with creating the rules, and that gave rise to the system that we're now referring to as the Florida Nursing Home Uniform Reporting System, or this awkward acronym FNHURS. So who's going to be impacted by these new rules? So the new reporting requirements cover all nursing homes that fall under 408.07 Florida statutes. The requirement is not just for Florida Medicaid participants, it's all Florida providers. CCRCs, though, however, are exempt. So if you're a CCRC provider licensed under Chapter 651, you are exempt from the new FNHURS requirement. Home offices for providers are covered as well. So what's actually required by these new rules? So the new rules require that each provider and their home office must submit on an annual basis financial reporting via an electronic portal. The reporting must be based on the provider's audited financial statements, and we're going to talk about what an audit is and what that means. a little bit later on today, or a reconciliation back to those audited financial statements has to be provided. The audited financial statements and required attachments must be submitted at the time you complete your reporting, and the reporting must be signed by both the administrator or CEO and the CFO of the provider, and the audit reports must be signed as well. So you can't submit draft reports, you can't submit preliminary reports, you have to have that final signed audit opinion. So when is the reporting due? The reporting for prior years must be completed within 120 days of the end of the provider's fiscal year. We're going to talk about timelines here in just a bit and what that means. There is an availability of a 30-day extension that can be requested at least 1 week prior to the due date. Extensions may also be granted for natural disasters and cyber attacks, or to match the provider's cost reporting deadline, but there's a very limited window in which this reporting is going to be due. The provider's fiscal year and the fiscal year for its home office must match. And the rules became effective on November 1st, and they affect providers with fiscal years ending 30 days after the effective date. So essentially, all fiscal year ends after December 1st, including December 31st, 2023, are going to fall under the purview of the new rules. There is a grace period for first-year audits. So if a provider or their home office is unable to obtain an audit for the first year of submission within the required time frame, the provider is still required to report within the required timeline, but can base that reporting on and submit its unaudited financial statements. Providers will be required to submit audited financial statements for its first-year submission with their next fiscal year submission, and the prior year submission must be updated if there are any changes. So important takeaway here, no matter what, providers are going to have audited financial statements for the first fiscal year ending after November 30th, including 12/31/2023. So if you don't have an audit lined up for 2023 yet, you're going to have to go back and get an audit, have an audit prepared for 2023. Even if you don't have that audit ready by the filing deadline for next year, you're still going to have to file your reports, and you'll have to get that audit completed in time to file it in 2025. Allison, I think the rules allow for a consolidated reporting, so you can have both your 2023 and 2024 fiscal year audit results in the same report, but the work is still the same, right? You're still going to have an audit for both years.
Right.
Yeah. Where are the reports going to be filed? So the reporting is going to take place in a new online portal. Everything else these days, it's going to use a portal system. The system will be available through ACA's single sign-on portal for providers, which you may be familiar with. We provided a link in the page there. There is a user manual for the portal that is going to be necessary reading for providers attempting to comply with this. And we'll provide a link for that down on the resources page later on in the slide deck. So what happens after filing? So you comply, get your filing done. The reports will be considered submitted when they contain all the required data, schedules, reports, and attachments. We're going to talk about what that means a little bit. It has the signatures of the administrator/CEO and the CFO, and you submit signed copies of the audited financial statement. So those are kind of the required elements for reporting. You complete the form online, you sign it, and you have your audited financial statements. The submitted reports will either be deemed accepted or not accepted. Accepted reports are going to be the ones where the data is in and it's mathematically accurate, all the schedules are there, and that you've met the basic minimum requirements. Providers submitting reports deemed not accepted will receive a notice of violation, and you'll have at least 10 days to respond. As of today's date, besides receiving a notice of violation, there's no explicit penalties set forth in the rule or statute for failure to comply, except that you will receive a notice of violation if you don't comply. So a lot of providers are asking, what about our cost reports? We're already doing some financial compliance. We're already submitting annual cost reports. So the new FNHURS system is in addition to and does not replace your Medicare and Medicaid cost reporting. Your cost reports are being used by ACA for rate setting purposes. FNHURS reporting will be used for financial oversight and accountability. The fiscal year ends for your FNHURS reporting do not have to match the fiscal year ends for your Medicaid cost report. So while providers in their home offices have to have the same fiscal year ends for FNHURS purposes, your FNHURS reports and your Medicaid cost reports do not have to have the same fiscal year ends. And this is kind of dates back to the world of cost-based reimbursement, where there was often some advantage to having a different fiscal year end date for your cost reporting. They do use a similar chart of accounts, and the home office definition is basically the same as the home office definition for your Medicaid cost report. So it's the definition that's found in the provider reimbursement manual. Changes in ownership. Reports will be due for the effective date of the child through the end of the new owner's fiscal year. So that's the end of the new owner's fiscal year. However, there are potential waivers essentially when you have a period of 9 months or less than 9 months of data. So if you've got at least 9 months of data, I think the rules are a little confusing in the way they're worded here, and we're going to have to see how they're actually implemented. But I think the big picture analysis here is, if you have a child and you're in control of 9 or more months of data, you likely have a reporting requirement. If you have less than 9 months of data, you may have a waiver for that first year report. That's just something, if you're in a provider experiencing a child, it's something you want to really, get with your auditor get with your CPA on and kind of make an assessment as to what you're reporting there. Jennifer, Allison, any comments on I know we've had extensive discussions about what exactly these rules mean. I think it does boil down to that, do you have that 9-month cutoff?
Yeah, I agree. I think that's what it says. It's not that clear in the way they wrote that, but I think the way you explained it is correct.
So that's just kind of the big picture overview of what the FNHURS rule is. The rule itself is pretty simple. Like most things in our world here in the long-term care industry, the devil's in the details, right? And in the actual execution of it is where the real challenges are going to be. And so moving from there, we're going to just let Allison Jones is going to take us through a discussion about the external audit process. So Allison, you've got the floor.
Well, thank you, Andrew. So if you've never been lucky enough to be on the receiving end of an audit, we wanted to just start by giving you a little taste of what the auditors will be looking to accomplish. First and foremost is the audit opinion on the financial statements. This is going to be the main deliverable that comes from the audit process, and it'll say whether or not the auditors believe that the financials are materially compliant with the requirements of GAAP. So what you are looking for as an auditee here is going to be an unmodified opinion. That's the best possible outcome you could wish for. That kind of opinion means there are no significant adjustments that still need to be made at that point in order for the financial statements to be presented in accordance with GAAP. Auditors will be testing for GAAP compliance in every major financial statement area, and compliance isn't necessarily limited to balance sheet balances and income statement transactions, but we're also going to be looking at the required note disclosures that go along with those financial statement areas and other areas. So if you've never been involved with GAAP, you may not know that it encompasses a huge number of concepts and requirements. So the testing here can be quite extensive, especially during a first year audit. In the area of internal controls, auditors are required to gain an understanding of your control systems, and then they'll use what they learn from that process to help assess the risks that the financial statements might be materially misstated in particular areas. And they'll then use that information to design what the audit procedures are going to look like, make sure they're going to be responsive to those risks. So they'll first review that existing documentation of processes and procedures and controls over all those major transaction cycles and balance sheet areas. And will likely then sit down with you and try to fill in any holes that they see in that documentation, all really with the objective of getting a holistic picture of the control system before deciding what the audit procedures are going to be for the rest of the audit. Do note that IT and cyber controls are also included in this assessment to some extent. So you'll want to also make sure documentation in those areas is in place, is complete, and ready to be shared with your auditors. While not, sorry.
Oh, Allison, I was just gonna, I'm sorry, I was just gonna ask, maybe, because we may have some folks who don't know, can you just maybe kind of give just a real quick overview of GAAP and generally accepted accounting principles and where that terminology comes from and what it means and that sort of thing? Because I think we may have some viewers who aren't familiar with that as much. It gets thrown around a lot, right? GAAP, what is it?
Sure,
What exactly does that mean?
Well, that's certainly an industry term that we use on a daily basis. So that encompasses pretty much all the accounting standards that come from the Financial Accounting Standards Board, as well as some other kind of lesser level of guidance that come out of other entities as well. So it is the full body of work that we refer to that tries to create consistency and accountability as much as it can between different types of entities. There may be different rules that apply to nonprofits versus for-profit entities, and that's all spelled out within the requirements as well. So it's a huge body of work that needs to be referenced constantly as we go through the audit.
Yeah, just when you thought you knew what your entire regulatory universe was in the long-term care industry, now you got a whole nother body of rules to pay attention to, right?
Right.
Yeah. So anyway, I'm sorry, Allison. Anything else on this slide?
Yeah, I just want to touch on the opportunities for improvement. I mean, that's not a required objective of an audit, but it is one of the biggest benefits that you can realize from having an audit done. It may turn over some rocks you haven't turned over before. There may be some opportunities for tweaking your financial systems, filling in the holes in internal controls, any number of things that the auditors might come across during testing. Another positive byproduct of having a favorable audit opinion is that it can make you easier to access capital from lenders and investors, since many times they require audited financials to aid in their decisions about your organization. And then at the end of the day, an audit's all about accountability, transparency. All the stakeholders are looking for reliable financials and a nice, clean audit opinion to go along with them.
Excellent. Any other comments?
Well,
Allison,
how about if I just keep in for 1 second and say that, again, it's mandated we do this, so we might as well try to make the best of it. And to me, what Allison said about identifying opportunities for improvement, it's great that you have an extra set of hands now that are going to be outside your scope of what you do every day to kind of give you some perspective. So I think if you try to make anything a silver lining, is maybe this will help with looking at things that perhaps maybe you didn't see before. And so you can always think of it as that is, we have to do it anyway, so let's get something out of it.
No, I think that's a great point. It is, I mean, it's going to be a compliance issue, but there are benefits to the providers, and operationally there can be benefits if you embrace the process. We're stuck with it. You're going to be stuck with the process, so you might as well embrace it and try to make the most of it, right?
Exactly.
No, I like that. So Allison, I think our next slide is walking our folks here through the external audit process overview. Kind of what are the steps?
Yes, this is showing the very broad level of steps from the perspective of the auditor. These are the key stages. They're all interrelated. They're all designed to work together to make sure that the financial data is as accurate and as complete as possible, and that we're seeing all the things that we need to be seeing. So we'll talk about the timing of these stages in a little more detail in a minute, but just to touch on kind of what each of these are. The planning and risk assessment phase, that goes hand in hand with that evaluation of the internal control systems we talked about a minute ago, and using the information we gather there, designing the audit procedures to address the risks, which then leads into the meat of the audit. That's the testing of the balance sheet and income statement amounts. The stuff you would typically think of when you think of audit, that's digging into the details, looking at the backup, looking at the documentation to prove out all those amounts and transactions. So that's where the majority of the time will be spent during an audit. But towards the end of the audit, the auditors will use what they learned during testing to judge whether there are any factors out there that may cause what we call substantial doubt about whether the entity might be in trouble as far as needing to close their doors, whether they will be able to continue as a going concern over the next year. And if there are any issues we need to dig into, we'll likely apply some additional procedures, see what's being done to address those, or if we can't come to a conclusion there, may need to modify the audit report if there are still some major issues at the end of that process. Also in the wrap-up stage, we'll do a subsequent events review. That's done to see if anything's happened since year end that may need to be reflected in the financial statement disclosures or the amounts. And then all of that audit documentation goes through a very robust review process by the audit manager, the audit partner, and also a quality control reviewer. And that's somebody that hasn't really been involved in the audit process at all. It's a cold set of eyes coming in with a fresh perspective. So then once everything is blessed and ready to go, the audit report and the opinion is then issued. And then the auditors stay in touch after that regularly to help work through any changes that might be needed to address findings that came up during the audit and lesser serious recommendations that may have come up, and making sure that things are being done to address those.
Allison and Jennifer, one thought as you're walking through the slides here, I was just thinking about, I mean, in the practical world, and those of you who may have experience with external audits in the bigger picture financial world, are probably prone to thinking, going concern issues. That's always something you want to avoid, right? In your audit opinion, like you said, Allison, the goal is always that unqualified opinion. Yep. I think it is worth pointing out that the FNHURS regulations actually don't require an unqualified opinion. They require a signed opinion, correct? But they don't necessarily require an unqualified opinion in order to be compliant with the rule. Now, what that might mean down the road from a future accountability standpoint or oversight standpoint is, I think, at this point undefined. Clearly, the legislature believed they wanted this information in order to do something with it. But I wanted to point that out. I mean, any comments, Allison, on the type of things that might raise a going concern evaluation? I know a lot of our providers are, the long-term care market is challenging. Reimbursement is constantly challenging. Costs are constantly challenging for our providers. What are the types of things that might trigger a going concern issue?
Lack of working capital. That's a big one when you're in over your eyeballs in debt and the forecast is not looking great. Any number of legal issues that are going on that could have a potentially catastrophic effect. Even changes in management, in upper level C-suite management, that causes a giant hole and things can get missed that could potentially lead to crisis situation where you don't have the expertise needed to run the organization anymore. So there's any number of things that can be going on that would lead to at least further investigation by the auditors. But yeah, going concern paragraph within your audit report is definitely something you want to avoid if at all possible, because it triggers the red flashing light that this is a problem and these people may not be here next year.
I know you touched on a couple things that I know are near and dear to the worries of probably most of our listeners today and most of our providers, which is, legal liability and, and revenue exposure, especially if you're a Medicare provider. So, I mean, Jennifer, any other comments or thoughts on any of those issues?
No, other than that is one of the things that why audits are really probably a good thing, because at some point that's making sure you actually understand the controls you have in place so that those kind of things don't happen in the future is how you're going to keep a sustainable business. So, it's not the way it came in, and the way this happens is maybe not the way everybody wants it to be, but honestly, that's this, creating this process of improvement for everybody is going to help them in the future.
So Allison, our next slide is on the timeline a little bit. So I know that's probably something people are listening, really thinking, all right, well, what is this really going to mean from a timing perspective? So you want to walk us through this?
Sure. Yeah, we just wanted to throw out this slide to show how the timing might work in a normal year for an audit client that's already undergoing an audit. And then this is the kind of normal process, typical timeline that we would use. Of course, exact timing is going to differ across firms and clients, but the flow of the activities here will generally be the same. And this is how it looks from an auditor perspective. Jennifer can provide more information on what it looks like from the provider side, but you can see it can almost be a year-long process by the time you're getting your auditors engaged, and then the initial planning, risk assessment, internal control assessment piece that can be and should be done well ahead of your fiscal year end anyway, just to make sure that all that documentation is done, audit procedures are designed so that once year end is closed out, auditors can jump right in there and be digging into the balances and into the transactions. So as early as possible for getting all that stuff lined up. So if you haven't been, doing an audit at this point, unfortunately, because of the timing on how this rule came out in the statute language, folks are behind the game and behind the game quite a bit. So there's going to be some catch up involved and a lot of work behind the scenes on the provider side, especially. So Jennifer, I don't know what you want to add.
Yeah, I just want to point out that, like, for example, if you're a December 31st year end, typically, according, what would be optimal for the auditors is to do testing in January and February, but all of us on the provider side would say, we're just closing in January. And so, and particularly usually when you're doing a year-end close, we would like to leave our books open as far out as we can to get everything in so we don't have to do as many accruals. But because this new timeline is really tight, meaning you have 120 days and possibly an extra 30, then you really do have to, even if you have been audited before, you're going to have to make adjustments to make sure that you have a very solid, timeline for your year-end close to allow the time then for the auditors to do their testing so that everything stays on track. So I definitely think it makes, it's going to make us have a really tight timeline, and we have to stay on track. So we're going to have to pay a lot of attention to it.
Yeah, I mean, Jennifer, I will just, I think there are several key things here. I mean, one, you look at that 12/31 timeline, and so, Allison, from the auditor's perspective, there are already several things that should have already happened, several months ago. And then, Jennifer, to your point, even for our providers who are getting audits already, they probably have, for the most part, some flexibility to, they get their year-end close done, like you said, in January or February. They may not even start really getting the auditors or responding to audit questions until, March or April. The new rule is really advancing that timeline. So if you're used to being comfortable with your audit being delivered in June or July, that audit's going to have to be pushed up now. And from the provider standpoint, you're going to think about, what does my staffing look like in June, in January, February? And do I have the people on the team who can devote time to helping get this done? I mean, right, Allison? I mean, I know your teams interact with clients every day, and that's, we are certainly aware of the challenges that our providers have, and and just they've got their own internal bookkeeping, and then they've got to turn around. The other thing that's unsaid here is you're going to be getting questions from your cost report preparers during this time period, who are trying to prepare Medicare and Medicaid cost reports. You're going to have fair value, reporting due dates in April. There's going to be a ton of stuff that comes down the pipe, some of which is going to feel more important. Perhaps if your Medicare cost reports have to be filed or they cut payments off. Nobody wants that, so there's going to be a lot of challenging, conflicting priorities here.
And maybe just to point out, remember, we made this time frame as an example of this year. So this year, if it's 12/31, you don't have to comply with that audit for this, like the timing for this year. You still got to do the audit, but you don't have to try to make that timeline. So, but every year after that, you are going to have to make that timeline. So you might as well start trying now to figure out how are you going to get all that done, because you're right. Andrew, not only are we trying to get the audit done, but we have cost reports that are due for Medicare and Medicaid right after that. So it's usually quick.
Yeah, it's a busy time of the year, and and even though you're absolutely right, Jennifer. Even though our providers do have a grace period for this first year, Allison, maybe you can speak. I mean, this isn't exactly the type of thing where you could just punch this out till winter of 2025 and then expect to go back and look back 18 or 24 months and be able to efficiently answer these questions, right? I mean, there is benefit to doing it while the information is still fresh.
Right. And I mean, there's a lot of, even if you don't have to have the audit turned in, for this fiscal year, there is a thing called, memory that tends to come into play. We're going to be asking a lot of questions, doing a lot of analytics, talking about what happened during the year and how those affected each other. And as time goes on, things tend to get fuzzy. So the sooner that you can talk about those following year end, and even better, during the year as things are happening, having conversations with your auditors so that everybody's kind of in the loop while it's fresh, while it's new, while it's on the top of, tip of the tongue. So constant conversations will be important too.
Allison, another thing that's not on this timeline, but maybe just touch based on one thing that's not really here. If you've never been audited before, there's probably some testing that has to be done to go back and address starting balances as well, right? I mean,
right. Yeah, this is from the perspective of an existing, audit client. So there are some balances within the balance sheet that do need a little extra work done. That's going to be things like your property and equipment, making sure that the costs that are on the books, the original costs, can be backed up with documentation. If you carry any kind of inventory, supplies, that kind of stuff, making sure that invoices are on hand and available to substantiate the balances that are still being carried in inventory. A number of items like that. So that's, the beginning of the year that's being audited, balances, as well as the end of the year. So there will be some significant digging into historical information that could go back several years. So just be keeping that in mind, that the archived information may need to be accessed as well.
Excellent. So the next slide, Allison, is talking about next steps for providers who are currently getting an audit.
Yes. First of all, if you're already having an audit, congratulations. You're ahead of the game a little bit. You'll be able to largely avoid some of those catch-up things that others are going to have to be doing. But we did want to bring up a few things that will apply to you as well. One, maybe ensuring that the home office is included in the audit now. If you haven't had an audit for the home office, if the facility itself has just been audited, making sure that you're including home office. Looking at the consolidation rules with your auditor, because there are some efficiencies that can be found if you're able to do a consolidated audit with the home office and the providers that are subject to the rule. The rule accepts this as long as the consolidated financials have supplemental schedules included that break out the different entities for both the balance sheet and the income statement. So that's something to consider and talk about. We talked about the deadline already, so I won't spend much time with that. But then also figuring out who is going to be responsible for the portal reporting? Are you going to have somebody internally work on it? Is it going to be whoever normally does your cost reports? Are you going to have the auditor's assistant doing it? The reporting is not going to fall within the scope of a normal audit, but the auditor can likely assist you as a separate engagement if that's what you decide you want to do. So figuring out who that's going to be, making sure that that piece doesn't get dropped will be very important.
Yeah, no, that's a good point, because your audit team it may or may not be used to having this kind of compliance reporting piece. Your cost report preparers, are already doing some of that for you in other portals with your Mac, or, helping you file your cost reports with the state, but they're not necessarily, this is not necessarily going to be in their scope of work either. So if you're already getting an audit, this is a new item that you're going to have to make sure is in somebody's scope of work to make sure it gets done. Any other comments around for providers who are already getting an audit? So if not, then Allison, Jennifer, we want to jump into, for those providers who aren't getting an audit now, what do they need to be looking for? They're probably, if you're not scared yet, you may be. So what do they need to be looking at?
I need to be looking at a lot, unfortunately. We've tried to whittle down that to some top priority items here that need to be addressed, as soon as is heavenly possible. We'll get into these each a little bit in more detail on the following slides, but first things first, you'll want to put together an audit committee and decide who your internal audit person is going to be. And we'll talk about the audit committee and kind of its role and structure in a minute. You'll want to make sure you find an audit firm that's both qualified and available. Make sure they're independent, that you don't have any personal relationships, family relationships with any of the folks within the audit firm. You'll want to figure out if there are any other professionals that you need to engage with in order to be ready for the audit when the time comes, to make sure that your financial statements are appropriately including estimates, that actuaries may need to be involved in helping develop that kind of thing. If you're not already following GAAP, like we talked about earlier, you'll need to spend some time to identify all the areas that need to be adjusted or any accounting standards that still need to be implemented, and develop a plan to get those adjustments made to make sure everything's tied down. We suggest starting first with the balance sheet and making sure those balances are nailed down and in accordance with GAAP and properly reconciled. That tends to be the easiest starting place. And then making sure documentation is in place for everything. We're talking, financial policies and procedures, the internal controls, all the IT security measures, backup support for all the balances and transactions, general journal entries, just basically everything that you do day to day in the financial world there. Jennifer, do you have anything to add to this before we jump into the more details?
You're on mute, Jennifer.
I was just saying, no, I think we have all of this in the details. So
yeah. All right, so let's jump into some of those details in a little bit. So coming over here, initiating the audit engagement. What do providers need to know about this process?
Jennifer, do you want to start by addressing this from the provider's perspective?
Sure. So for an audit committee purpose, right now, currently as providers, you already have to have a compliance officer and as part of your QAPI team. So I really think that, not to duplicate efforts, I think you really should look at, who's on your QAPI team. If you're a single standalone SNF, that might be the administrator, different, whoever does your accounting, like there has to be some of those same people so that you're not duplicating efforts. Anything that you do from an audit standpoint, any findings, those should be run through QAPI anyway. So it makes sense to try to combine those efforts. If you're part of a chain or have some type of oversight from a financial standpoint, if you have any financial control outside of your facility, those people should also be involved. So if there's a CFO somewhere else, that person should be on your audit team. So I think you have to, it's going to depend on your situation, but you definitely already have some of this in place because of copy. So you definitely should take advantage of the fact that use the people you have in place.
And the role of the audit committee is more than really just making sure that the audit happens. It's also, monitoring and oversight in other areas that are tied into the audit, stuff like internal controls and risk management and ethics and legal compliance, regulatory compliance, all kinds of stuff. So there are some tools that we expect to be able to provide during our next webinar in this series that talks about the roles and responsibilities of the audit committee and have a toolkit that's associated with that.
And I would just say, even outside of the audit committee, and this person could be part of the audit committee, but having a point person that is going to be on your team that is responsible for kind of making sure that information is getting provided, that if the auditors are asking for information, that you're help coordinating that. I wouldn't say that that's necessarily always the CFO, because you have so many other duties going on. So if you are in a chain organization and you have, different staff accountants, definitely probably using one of them as the point person is my recommendation, because there's always a lot of information going back and forth, and you have to oversee it, but somebody has to be there day to day to, like, has it been sent? Is it not sent? Where are we with all the different pieces that we're looking for? So
yeah,
that's an important role as well.
I will just add, as you're thinking about staffing internally, also be thinking about, you've probably got somebody already designated to field questions from your cost report preparers. And so if your auditor and cost report preparers are they're going to be the same firm, you should be having a discussion about how can we work together as a team. If they're going to be different firms, you're going to have to be prepared for getting lots of questions from two different firms, often probably covering some of the same issues and concerns. So just you have to be really, I think there's, having that liaison and having an audit committee in place is going to be key. So, So Allison, what about identifying a qualified audit firm?
Well, this is something you should jump on sooner rather than later, especially nowadays. There is, a shortage of auditors out there and based on the math, there are going to be more providers who need an audit than there are, qualified Florida licensed CPAs. So it's kind of the early bird gets the worm as far as lining up your auditors, but still do your homework, look for experience working with organizations that are similar to yours, and make sure your personalities mesh well with the audit team. A lot can be learned from making sure that your auditors don't have, gotcha attitudes, and are really wanting to lean more towards being somebody that's going to be impartial when doing your audit, but with a fair attitude of helping you with a continuous improvement mindset. So making sure independence is there, like we said earlier, and making sure that the experience level is there, that they have healthcare background, they have support, they know people that they can call upon if intense, complex questions come up. So all manner of things that can be enlisted when you're shopping for an audit firm there.
Allison and Jennifer, just another thing that comes to mind here. I know if you've got folks on the call, who've been around the block a few times, you may think of auditors as, a team descending on your office for a week or more at a time in person. That's changed a lot, but I mean, Allison, that's a question that they should be having with their audit firm candidates, right? What is the expectation of on-site these days? What is the expectation of remote? What kind of access will they need? Because that's something that, is not as common these days anymore to have, 3 or 4 auditors descend on your building and camp out in your break room for a week. But but you need to understand what the expectations are there, right?
Right. And that's going to vary. I mean, different audit firms and different, SNFs are going to have different perspectives on that too. It depends on, your software system and how accessible that is remotely versus in person. Simple space considerations, but with the pandemic, we found that most clients have preferred to do more remote than not. So that is kind of the trend that the way that things are going. So just knowing that most folks are going to be set up to do that if your systems can accommodate it.
Yeah, and I would just add, though, I would also want to make sure that they assign me a point person. I want to know who is in charge that I can talk to, or whoever my liaison can talk to that liaison, because even remotely, if you have 5 or 6 different people coming at you with questions, that can bog down the department, so I feel like they need to also be willing to do some type of funneling where they have a point person that's going to work with our point person. So I would always make sure that when I'm looking for an audit firm, that that's what I look for, and that I meet that person beforehand. So, do they bring that person to the interview with you when you're interviewing them, so that you can meet them and find out and make sure that they are going to be, a person that you can work with, because you do end up working with them quite a bit.
Which is where the matching of personalities comes in a lot of times too.
Definitely. And I can't stress enough that having a firm that has healthcare experience, you do not want to have to start trying to teach people how PDPM works, or how, it just isn't, that is not going to be an efficient use of your time. So to me, that's a super important thing too.
And then Allison, you touched on this earlier, and people are probably thinking I've got to hire an auditor, and then you started talking about other consultants. So what are the circumstances where you might have to get actuarial or appraisal or other consultants involved?
Yeah, you may or may not need this kind of work. It depends on whether you have some of the components that will need it. For example, you may have a workers' comp policy with a self-insurance component associated with it, where an actuary will need to get in there and look at incurred but not reported claims experience and be estimating liabilities. Similar with a med-mal policy where there's some exposure that's being borne by the provider, may need to get some help with estimating those liabilities, and in any other kind of legal liabilities that may come up, may need some, professional legal opinions as well. So
big red flags would be any kind of self-insurance type of arrangement where you have where the provider has exposure, right?
Right.
Yeah, self-insurance or a high deductible plan, because a lot of times people can get high deductible plans, and then you're still, liable for the first $500,000, $1 million, or something like that on each claim. That's still something that you usually have to.
Yep. And we've even seen actuaries get involved where there are some like deferred comp structures where there's factors involved that have some complex estimates that go into the calculation of the deferred comp liability. So there's a number of things that you may not think about until you start to dig into how GAAP says those need to be treated. So
excellent. All right, and then I think as we close in here on our time with our viewers here, just preparing for the auditors. So what are our providers who've never been audited before, or even our providers who are getting audited, just things to think about? What do they need to be doing to get ready for the audit? I know we've touched on some of this, but really, what do they need to be doing now?
Quite a bit, honestly. So they're going to be getting pretty busy identifying, what GAAP says they need to be doing versus what they're not already doing. Beginning with that first audit period is going to be very important. That's if they're not already making accruals for payroll liabilities and pay time off, if they don't have the legal liabilities recorded like we were talking about, or the insurance liabilities, getting the proper lease accounting pronouncements in place.
Big one.
Lease agreements have come under increased scrutiny in the recent years, and These days, you have to record what's
Mhm.
called right of use assets and lease liabilities for, the projected payments that are associated with those contracts. Looking at goodwill impairment and potential amortization of goodwill that may need to happen. Revenue recognition is a big one. Determining, when to recognize revenue, especially if you have a bunch of long-term contracts or services that are provided over time, that can be huge and extremely challenging to go through those calculations. So, Jennifer, what from a provider look would you say might be included in that?
Yeah, I mean, some of the things to look for are, look at any of your contracts that are multi-year, multi-month, things like that that might be impacted. That's usually a good place to start. Software agreements, licensing, those are things that I would look at. Fixed assets are a big one too to look for, because sometimes if you're not depreciating assets the way you should be, maybe that's something, because of like tax depreciation versus GAAP depreciation could be different. So there are definitely things there you have to look at. Sometimes you have to keep 2 separate books on depreciation, even 3 sometimes, I think, for cost reporting. So, right. So like there's definitely some things that if you haven't been audited before, those are things you should look at. I would say bad debt, how you book your bad debt reserves is something also to look at. And do you have a proper process for how you do it, and not just when you think you want to do it? Make sure you have a real defined process for it. And of course, I think back to liability reserves. How do you, if you do have a high deductible plan or self-insured, what is your reserve process? Because I think that's something important to make sure you understand and that you can convey how you do that to your auditor.
Yeah, I will say a lot of our, we certainly recognize, there are a lot of, especially smaller providers out there, or small organizations that haven't been audited in the past. Your books, may be being kept on, on a quasi accrual or a accrual, a tax basis type of accounting, more than a true GAAP basis accounting. And, if you've never had to really look at it and address that issue, starting to ask those questions about, what are we really going to have to do to get GAAP compliant? Because I mean, just simple things like tax basis depreciation versus GAAP depreciation can be, lead to some very different balance sheet amounts, right? I mean, you get to 2 very different places, and so you need to be looking at those right away. I mean, and then, also we talk about building documentation file. Are we talking about, paper documentation? Are we talking about saving? I mean, what do providers need to be looking at there?
Well, I'm sure there's still some paper floating out there these days. Most of everything we see is scanned. Generally now, a lot of things are scanned into the financial statement package itself, the software system itself. And a lot of the audit work can be done by navigating through that system. But we're talking about not just the backup for transactions and the backup for balance sheet balances. We're talking about accounting policies, step by step for how you guys do stuff, the control structures, both at the overall entity wide level and for each reporting area, for each area of the financial statements, the IT and cyber processes, controls, all manner of things. So there is going to be an extensive list that your auditor will give you of all the stuff that will be needed. So the sooner that you can get an idea as to what you need to be working on, the better. But we found that the toughest and most time-consuming process involved with a first-year audit is getting down in writing how you do things as of that point in time, to be able to share with the auditors, the day-to-day processing of transactions and the controls that are associated with those. So that's really challenging if those are not already documented in writing.
I mean, and I mean, Allison, it's not out of line to say too that, especially if you had personnel changes or leadership changes, and if you've made changes in the way that you are accounting or booking for things. I mean, certain balance sheet items, you may need to be able to go back and understand what were we doing back in 2022, right? Because they may be impacting starting balances for 2023. And so, we're already at a point where you may be looking back 12 or 18 months or more documentation is just another highlight as to why you don't want to wait until sometime late next year or early 2025 to start trying to do these things, right? Because it's
Right.
going to become more and more difficult if you start to get 18 or 24 or 30 months out from when some of these changes took place.
Well, and keep in mind, some things like looking at property and equipment, you may have a big piece of equipment that came on 10 years ago. Well, we're going to need to be looking at the documentation for the cost that was paid for that equipment 10 years ago. So there's stuff like that that when I say you need to make sure you know how to access your archives, that's what we're talking about.
Absolutely. Anything else around preparing for the audit? We're at about 12:55, so we got about 5 minutes left in the hour. Anything else on this slide?
Well, I would just say that, that definitely, to Allison's point, the documentation, especially if it's your first year, is rough, but it does get better, because then for next year, you should just take that out and look at it and start going through and saying, is this the same? I think this first year, if it's your first year, the hardest thing is, like, literally, you might have a policy about cash, but does it really tell you who has access, who controls the checkbook, who can write a check, who can do, it has to be very detailed. So you definitely have to, I've seen a lot of policies out there, and our policies are a lot more generic usually. And so the process document that you need to put together is a lot more comprehensive. And you really could start now thinking about that and saying, like, how does cash get from the facility to the bank? Or how does credit cards get processed, and who has access to that information? And so there's a lot of things like that. I think that you could start thinking about how you do things. I also think that organization, back to that, yes, a lot of things are electronic, but making sure it's consistent so that it's easily accessible would be also something that's key, that if you're not doing now across your organization, by department, everybody should have the same mentality about how you file something, so that it's easy for anybody to find those things. Because I'll tell you, that's the one thing that always becomes a problem when one person files things by accounting period and one person files things by, department, or one person files by vendor, and then you're trying to find all those different pieces. So to me, coming up with standardizations on those things, if you don't have them across the board, not just your own, is also very key.
Yeah. No, I love that. That's all great advice. And I tell you, one thing that's not on here, but we're just talking through this, I'm just thinking from the provider standpoint, and we've touched on this a little bit, but you've got to be thinking about staffing and how you're going to get this done, and how your team is going to get this done, and how it's going to impact your accounting team, right? Because if you just, if you've got a small team, if you're a smaller provider, or even a larger provider with a team that runs really efficiently right now, you're just dumping a big new process on them, and you really are going to have to think about resources. And it's, unfortunately, one of these things is going to be really intensive in the first, these next 18 months are going to be a real challenge as you go through this whole process and get in a groove. And then once you get in a groove, things might calm down a little bit, but you're going to have a busy several months. So just be thinking about your team and your team's mental health and stress levels and everything else that goes along with it, right? Because they're going to be stressed out by this.
So we plan to go into some of these, more recent things that we talked about on the last couple of slides, dive in more deeply and talk about the audit implications, involved with kind of each of those areas on our next part of this webinar series. So we expect to have some tools to share with you at that point too, about controls, about audit readiness, things that'll help you kickstart the audit documentation process. So we hope you'll be able to attend and see what's next.
Yeah, absolutely. So we do anticipate having at least one, possibly a couple more parts to this as we go through the kind of the nuts and bolts of how to attack your audit. I hope all our viewers have found this really helpful. We've enjoyed being here. Thanks for coming and joining us for your lunch hour on this Thursday. If you've got any questions, please feel free to put them in the chat. We've got just a minute or so left, but if we don't have any questions, then like I said, you'll be getting a link soon for the webinar, and we appreciate everybody's time today. Jennifer and Allison, thank you both very much.
Thank you, and thanks to everybody for dialing in.
Yep. Thanks, guys. Have a great day.